Time for Three Stock Lunch. We take a look at some movers of the day. First up, Affirm shares up 9% today after data show consumers are embracing buy now, pay later so far this holiday season. And here with our trades is Michael Landsberg, Chief Investment Officer at Landsberg Bennett Private Wealth Management. Your take, Michael, on Affirm?
I'd be running. I mean, this is like the lowest part of the credit spectrum. They're seeing buy now, pay later are increasing while credit conditions are deteriorating. Stock's up like 100% in the last 12 months to only be down 85% in the last two. I'd hopefully nobody owned it this long, but if I didn't, I'd sell it or probably short it at this point.
It's just too much trouble for you. Too much.
I don't know how they're going to make any money, Tyler. I look at it. Revenues increase every year for this company. They've never made a nickel. I think two presidential elections from now, they may be profitable. It just seems like a long time for a strategy to play out.
Wow, you'd short it even. Wow. All right, let's see what you do with Kraft Heinz. Those shares were popping earlier, but are now lower after announcing a $3 billion share buyback. Pretty sizable for this kind of environment. What do you make of this?
I mean, the issue I think with Kraft is volumes have been declining, mid-single digits, but it's been an anemic grower for the last 5 to 7 years. Just not a lot going on here. And I think this kind of cloud with the glucagon-like peptides, from the Ozempic Mounjaro folks, that's a problem because we all know, ketchup and condiments are not healthy. They're chock full of sugar. So I wouldn't want to own this here either. I think there's better opportunities. Yes, the dividend's high, but cash is paying high. So I don't have the headache of owning. If I want some yield, I'd rather have cash than have Kraft.
So you do see these weight loss drugs as a real threat to some of the food companies and the grocery companies?
Certainly. I think I look at behavior. These things have seemed to basically go on and dominate wherever they are, whether it's cardio, whether it's kidney. And some of these foods that are typically unhealthy, I think people may look and say, gee, do I need to eat that as much? Or is this a good thing for me? And I think that's a problem.
Yeah. Ketchup on fries is still pretty good, I got to say. I mean,
it's spectacular.
It's pretty good. Yeah. All right, let's move on to Pinterest on the move today after new street research initiates a buy on the stock, seeing an upside of more than 50%, even though the stock is already up 30% year to date. Michael, what about Pinterest?
Yeah, we like Pinterest here. Adding, obviously, e-commerce to make it attractive to third-party advertising. That's a smart move. Obviously, anytime you can partner with Amazon, that's a good move, because Amazon seems to be the driver here. I think we're going to see some margin expansion over the next couple quarters. Yeah, I'd caution by getting too optimistic, because obviously, Meta told us, we may see a little slowdown in advertising, but I think this is a good move for Pinterest. They are kind of a high single-digit grower. They earn money, which is, a nice thing in the tech space is you got companies that are earning money, their earnings are growing. So I think it's an opportunity here, maybe in a pullback, to be able to start to look at the stock for the next 1, 2, 3 years. I think it's a good story.
Michael, any thoughts on the consumer as we get our data points from kind of the kickoff of the holiday spending season?
I think the consumer's in rough shape, Kelly. It's not to say they're not going to spend a lot of money over the holidays, but credit card, $1 trillion now in debt. I think people are having more problems making, ends meet. And what an Affirm tells me is they can't get the money from regular credit cards. You're going to go to a lower, almost a subprime environment to get the money. So I think that's a problem. And I think that's ultimately what we're going to see is I think the lower end consumer, they're really tapped out. And I think there's 40, 50% of the folks in the country, they're having problems making ends meet. Doesn't mean they're not going to spend for Christmas, but I think January, February, March, you're going to look at a real slowdown in the retail space. A lot of places I'd avoid.
A lot of places you would avoid.